Are you interested in trading but don't know where to start? The Forex market might be just the thing for you. Currency trading can seem intimidating at first, but with the right knowledge and strategy, it can be a lucrative investment opportunity. Hello viewers and welcome to our channel. In this video, we'll break down the 5 steps to understanding the Forex market, from learning the basics of currency trading to starting your own trades with real money. The Forex market is the largest and most liquid financial market in the world. It is a global marketplace where currencies are traded 24 hours a day, 5.5 days a week. This makes it a complex and challenging market to understand, but it can also be very rewarding. Here are 5 steps to understanding the Forex market. Step 1. Learn the basics of currency trading. Before delving into the intricacies of the Forex market, it's essential to understand its basics. Currency trading involves buying and selling currencies based on their exchange rate fluctuations. The concept may seem straightforward, but there are many factors that contribute to these currency price changes. One essential aspect of understanding currency trading is knowing how to read a currency pair correctly. A currency pair consists of 2 currencies with different values in which one represents the base currency and the other denotes the quote or counter currency. Another important consideration when learning about Forex is understanding what influences exchange rates. Factors such as political events, economic data releases, and central bank policies can all impact a country's economy and consequently affect its currency's value. Step 2. Understand the factors that affect currency prices. The foreign exchange market is a highly volatile and complex marketplace, where currency prices are constantly fluctuating based on various factors. Understanding these factors is crucial for any trader looking to invest in the Forex market. One of the main drivers of currency prices is global economic conditions. Factors such as interest rates, inflation rates, and GDP growth can all impact a country's currency value. For example, if a country experiences high inflation rates or low GDP growth, its currency may weaken in comparison to other currencies. Political events also play a significant role in determining currency prices. Elections, political instability, or even natural disasters can affect the supply and demand of currencies, which will ultimately lead to fluctuations. Another factor that affects Forex markets are geopolitical tensions between countries. Trade deals negotiations and political disagreements could lead investors to shift their focus away from certain currencies, leading to sudden changes in value. Number 3. Choose a trading strategy. Choosing a trading strategy is an essential step towards your success in the Forex market. There are various strategies to choose from, and you need to find one that suits your personality, trading style, and risk tolerance level. The first thing you need to consider when choosing a strategy is your goals for trading. Are you looking for short-term profits or long-term gains? Do you prefer high-risk trades with potentially high rewards or low-risk trades with smaller returns? Next, take into account the technical indicators and analysis methods that suit the type of trader you are. For example, if you're a day trader who likes quick turnarounds on positions, then scalping may be the right approach for you. Number 4. Practice trading on a demo account. Before jumping into live trading, it's important to practice on a demo account. This will give you a feel for how the Forex market works and help you refine your trading strategy without risking any real money. A demo account is essentially a simulated version of the Forex market where you can trade with virtual funds. It allows you to test out different approaches and get comfortable with various trading tools like charts and indicators. When practicing on a demo account, it's essential to treat it as if it were real money. Don't take unnecessary risks or make trades that you wouldn't make in an actual live market situation. The goal here is to learn from mistakes and develop solid strategies that work for you. Number 5. Start trading with real money. Now that you have gained enough knowledge and experience trading on a demo account, it's time to take the next step and start trading with real money. This can be an exciting yet nerve-wracking experience for beginners. Before jumping right in, it is crucial to remember that trading with real money involves risk. It is important to have a proper understanding of risk management techniques such as setting stop-loss orders and limiting your position size to avoid significant losses. It is also essential to choose a reliable broker who offers competitive spreads and fees. Look for brokers regulated by reputable financial authorities and do your research before committing any funds. So this was our today's video. I hope you all like it. Don't forget to hit the like button and subscribe the channel. And share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.